Welcome to CPA Australia's webinar on opportunities for assurance on non-financial information. I am Claire Grayston, the Senior Manager for Audit and Assurance Policy at CPA Australia. We have people joining us today from all over the country and internationally. So I'd like to take a moment to acknowledge the traditional owners from around Australia and pay my respects to elders, past, present and emerging. I extend this acknowledgement to all Aboriginal and Torres Strait Islander people who are joining us today. I would also like to acknowledge that today we are joined by the CPA Australia Board Directors, President and Chairman of the Board, Merryn Kelsall, and Board Director, Louise Cox. Thank you both very much for joining us today. I'm also very excited to have such a knowledgeable panel of speakers with us to share their insights on the opportunities for assurance on non-financial information. The reporting of non-financial information is rapidly gaining momentum across the globe, and assurance on that information is increasingly being called for. But before we get started, I want to note that you'll hear many different terms and acronyms today, such as ESG, that is environmental, social and governance, sustainability, integrated reporting, climate-related disclosures, and EER, which is extended external reporting, a term used commonly by the IAASB and AUASB. These are part of the myriad of developments in non-financial reporting, which can be confusing, and there's not a single approach or framework which is being applied universally. However, all of these frameworks and terms are encompassed within non-financial information, which may be reported on and on which assurance can be provided, which our speakers will talk about today. So it's now my pleasure to introduce our three presenters. Firstly, Carol Adams is a Professor of Accounting at Durham University Business School in the UK and Swinburne Business School in Australia. She's the Chair of the Institute of Chartered Accountants of Scotland's Sustainability Panel and member of their Policy Leadership Board. She's held governance or technical advisory roles with the GRI, Global Reporting Initiative, that is, Climate Disclosure Standards Board, the CDSB, and the International Integrated Reporting Council, IIRC, and is author of the Sustainable Development Goals Disclosure Recommendations. Carol will be talking about the what. What is the demand for non-financial information and sources of confidence and trust? Our second speaker is Meg Fricke. She's a partner with EY's Climate Change and Sustainability Services team in Melbourne. Meg leads EY's Oceania Sustainability Reporting and Assurance Services, in which she focuses on sustainability risk identification, materiality assessments, strategy development, reporting and assurance across various subject matters, including climate change, water, reconciliation, modern slavery, diversity, biodiversity, and broader sustainability. Meg will be talking about the who. Who can meet the demand for non-financial information assurance and the accountant's role? Our third speaker is Jo Kane, who's the Managing Director of Materiality Accounts. She advises on sustainability, stakeholder engagement, materiality strategy, integrated thinking, reporting and assurance. She's a member of the AUASB and also a non-executive director. Jo will be talking about the how this assurance can be conducted by sharing the available extended external reporting assurance resources available. Today, we'll be taking questions through our Q&A box. My colleague Courtney Love is here to help with tracking your questions, and please direct questions to all panelists. We'll address questions at the conclusion of the presentations, and we'll do our best with the time available to get to all of your questions. If you have any troubleshooting queries, please put them in the Q&A as well. And Chloe, who introduced this session, will handle those. So now it's time for our session to commence, and I'd like to hand over to Professor Carol Adams. Thanks, Carol.
Thank you very much, Claire, and thank you very much for having me here. There's been a lot of talk about alphabet soup in the last few months, and let me explain what that is. It's referring to the number of different standard setters in the area of non-financial reporting and sustainability reporting, but really there's only a few key ones and they all do quite different things. So there's the Global Reporting Initiative, which has been around since the late 1990s, which sets sustainability reporting standards. And these standards are principles-based standards which focus on the impact of organizations on sustainable development. The TCFD, climate-related financial disclosures, are about climate change disclosures. I think most of you will have heard of the IIRC, which set the International Integrated Reporting Framework. That has now merged with SASB, which is a rules-based reporting on sustainability matters so far as it affects enterprise value, and they've merged to form the Value Reporting Foundation. The CDP is not really a reporting framework, and the others there are not really used as significantly as these other frameworks. The GRI is the most used. It's used by about 10,000 reporting organizations, and the TCFD is rapidly taking off and being included in legislation around the world. So that's the alphabet soup. Now, why has this become an issue, and why have people been talking about alphabet soup? During the pandemic, there has been an increase in what's called ESG investing. So investing in and thinking about environmental and social and governance issues. But there's a big variation in what that means to investors. You know, there are a group of investors, large investors and asset managers, who are calling for the simplification of sustainability reporting and their ability to assess sustainable development issues as they affect organizations. And so there's been calls for harmonization by private sector interest bodies to simplify all of this. And with my colleague Subhash Abhay-Awansa, we identified 19 key reports which led to the, which really informed the discussion around harmonization. And many of these reports take what is assumed to be an investor perspective on what is needed in terms of corporate reporting. All but one of them, one that I led with Russell Pico from the TCFD recommendations, and Paul Druckmann, who used to be the CEO of the IIRC, the SDG recommendations, that serves the interests of both report preparers and investors and wider stakeholders. And it talks about value creation for the organization and society rather than this narrower view of enterprise value that's talked about in you know, some of the other initiatives, particularly by the IFRIS Foundation and the Value Reporting Foundation. So there are three statements that have been made around all of these developments that I just want to get into and talk about a little bit. There's been a statement that there's an urgent need for a global sustainability standard setting body. And this is something that the IFRIS Foundation said in their initial consultation paper, and made an argument that it should be them that is this body. In fact, there are already global bodies. It's not like the time when we were talking about harmonization of financial reporting, where it was different around the world. There are two main global bodies: the Value Reporting Foundation, and which looks at reporting from an enterprise value perspective, and the Global Reporting Initiative, which looks at reporting on the impacts of an organization on sustainable development. So that, to my mind, is somewhat not a bit of a myth there, I would say. And the second point that's been made is that financial materiality should be paramount in the determination of what to disclose on sustainability issues. And the problem with that is that you can't get to what's financially material if you don't know what the impacts of the organization on society and the environment, on sustainable development are. And that, to me, really needs to be the starting point. There's also been a case made for consistent and comparable metrics being a priority. Now, I agree it doesn't help where different standards and frameworks use different metrics. But I think we must not lose sight of the importance of narrative reporting. We really must see more reporting on the processes that organizations undertake to determine their material issues, to engage with their stakeholders on those things, and the governance oversight, all of that, and how these sustainable development risks and opportunities are incorporated into strategy. Now, that, to my mind, is something that investors really ought to know about. The quality of management is important in thinking about the future value of an organization. So we mustn't lose sight of the importance of narrative reporting on those processes. Next slide. And I want to highlight two fundamentally different approaches to sustainability reporting that are really emerging at the moment. There's the proposals put forward by the IFRS Foundation and the proposals put forward by the EU, working with EFRAG, the financial reporting body there, the Global Reporting Initiative, and now also SHIFT, which focuses on human rights issues. Now, these approaches are different in some very fundamental respects. So the IFRS Foundation argues that the audience is investors. The problem with that, I find, is that investors have very different views around what they're looking for and what they need to look for around sustainability matters. The EU is focusing on all users of sustainability reporting and affected stakeholders, stakeholders that are impacted by the organisation, including with respect to potential future impacts. The IFRS Foundation is going to look at climate first, and perhaps then also look at other ESG matters. Whereas the EU's approach is that all of these things are interconnected, they're from the start looking at broad sustainable development issues. And this is important because it's about making sure that conceptual framework that they adopt and develop is fit for these broader issues. If you start off just looking at one issue, there's a danger that the conceptual framework won't fit the other issues as well. The materiality from the IFRS Foundation perspective is information material to investors, again undefined, lenders and other creditors, whereas the EU is working with the idea of double materiality, and that's about financial materiality, but also identifying the material impacts of an organization on sustainable development. And remember, as I said, these can come back and affect the organization's value in the future. The IFRS Foundation has said that it will draw on the TCFD recommendations, and what I see as a conceptually flawed prototype standard that was facilitated by the Impact Management Project and Deloitte, based on these, on 5 of these organizations' work. And I say conceptually flawed because it's not really fully integrating, to my mind, this notion of the accountability of organizations for their impacts on sustainable development. And the EU is adopting an overarching principles-based approach, supporting an inclusive range of stakeholders and built on initiatives that have similar goals. Now, why is all this important? Well, it's important because IFRS has that link with IOSCO and stock exchanges already, but the EU will make its proposals mandatory through the Corporate Sustainability Reporting Directive, and it will apply to 50,000 companies across the European Union. They will likely spread that through their supply chains because large companies make accountability demands of their supply chains, and other companies are likely to look to what the EU is doing, and other countries as well, in order to pick up best practice. Next slide. So these are the key components of the alphabet soup. Again, just to give you some headlines of the headlines here of the dates that they were founded, their key purpose, the GRI promoting on transparency with a view to that will help lead to change, being principles based. It includes the narrative reporting, the double materiality focus, and the recent KPMG Sustainability Reporting Survey found that 73% of the world's largest 250 companies use GRI reporting, and 67% of the top 100 companies across 52 countries, so that's 5,200 organizations, use GRI reporting, around 10,000 organizations in total around the world. The IR framework, again, that's promoting value creation and integrated thinking, which is very valuable to organizations in terms of developing that change approach. Not as well used in terms of the statement of use in the report, but the practices are diffusing through organizations who are looking to what other organizations are doing and adopting some of the elements of integrated reporting. The SASB standards, the industry-specific standards, they're rules-based, primarily reporting indicators focusing on financial materiality. Next slide, please. And so this is just a brief introduction to the SDG recommendations, which I developed with Paul Druckmann and Russell Pico, and it's been published by a number of leading bodies working in this space, both from the accounting angle and also the World Benchmarking Alliance. And we took from this, it's not a new framework, but we took from this the parts of the existing frameworks, the IIRC, the TCFD, and the GRI that we thought were going to really help bring change towards reporting on the SDGs, because this is something which is really increasing. Organizations seeking to mention the SDGs in the report, and there's a lot of what we call rainbow washing, where organizations are not really changing their strategy to adapt to the SDGs. So we have three fundamental concepts here. We talk about long-term value creation, not just for the organization, but society as well. So there's this view that that we have that you can't create value long-term for the organization unless you're also thinking about the value you create for society. We also have in there that you have to think about the sustainable development context and relevant sustainable development issues. And the definition of materiality, which I've included in here, it's a variation on double materiality. We've got the impact of the organization on sustainable development and stakeholders there, but instead of just financial materiality, this looks at value much more broadly than just the balance sheet, because we know that there's a lot of matters that that represent value to the organization that don't go in the balance sheet. So we're trying to get away from this talk of financial materiality. Next slide, please. And so this is just the parts of the different frameworks that we thought were of value in including in these SDG recommendations. And so my point here is really that these frameworks do different things. And so the idea of harmonizing them, but only looking at what one or two of the frameworks focus on, the VRF and the TCFD recommendations, is missing something. So the IFRS Foundation don't want to get to, in their conceptual framing at least, any of the focus on the impacts of the organizational and sustainable development that the GRI standards deal with. But that process of engaging with stakeholders to identify material impacts is of critical value to organizations in identifying risks and opportunities and issues that might come back to impact on value down the track. Of course, these issues don't all need to go in the annual report. And in fact, the Global Reporting Initiative has a content index where it goes through all the reporting requirements, and you can say whereabouts in what report you've included them, or whereabouts in your on your website you've reported them. So organizations can apply judgment as to which items are really material to include in the annual report. Okay, so these are some examples of some types of greenwashing that we see. Disclosing an incident or a fine, but not the harm it causes. And that can be an issue down the track for organizations. It can be, a lot of these can lead to reputation damage. And I have seen all of these examples of types of greenwashing in annual reports. And I really recommend to you the video interview there on the link that I had with Sir David Tweedy, who was the first chair of the IASB, and Mervyn King, who's a former chair of the IISC and GRI, where they talk about what they think about all of this and the conceptual framing around all of this. So I recommend that to you. And the next slide just has a few recent examples of greenwashing and some links to reporting on that you can look at your leisure after the event. I spent a lot of time looking at the VW issue there. The CEO's statement in 2018, just before the scandal broke, talked about how their responsible approach will help to make them the world's leading automaker by 2018, and both economically and ecologically. And a lot of people bought VW cars on that basis. So it's that really is greenwashing, and it's almost a fraudulent way, I would say, of generating additional revenue. So this idea of being accountable for the impacts of the organization is, to my mind, absolutely critical for enterprise value there. And I will stop there. I think my time is up. Thank you very much.
Thanks, Carol, so much for setting the context around that. I'm Meg, and I'm going to take it for the middle stint here before handing on to Joe. In terms of I guess the role, as Claire introduced me at the start, I work in a team of about 280 people at EY, but of course there are similar teams in the other accounting firms as well, and we do spend, you know, a fair proportion of our year looking at the assurance side of the business, and I'm going to talk to you today about some of the drivers that we see, kind of the uptake of non-financial assurance. And then really how we approach it, the skill sets that are used, and then how I think it's evolving. So really happy to take your questions. I'll keep monitoring the Q&A as it goes. So please pop a question in there if you have it, and I'll try and answer it on the fly. So starting for the drivers for non-financial assurance, really building on what Carol said around, the increase in demand and complexity around ESG or non-financial reporting. Flowing on from that, there is a significant drive for non-financial assurance. We have been doing non-financial assurance since I started at EY, which was about 18 years ago. And it's been kind of ticking along as an area of interest, probably more leading practice companies doing assurance. And then really in the last couple of maybe 3 or 4 or 5 years, there's really been much more interest, much more awareness of the need for assurance. And these sort of, it looks like a bar graph at the top. It's just my guess or my own judgment on what I see as who's driving assurance and the demand for that assurance. And investors is probably the #1 driver in my mind. So as Carol has pointed out, investor interest in ESG information that they want to support their decision making. So they've understood the connection between ESG factors and financial performance. They want that information. They also really want to trust that information. And what we found is EY does a survey, and feel free to look it up, or I can pop it in the Q&A around ESG information and the importance of ESG information to investors. And we've done this since 2013. And over that period, we've really noticed the interest and demand for that ESG information has really increased over that period. But one of the kind of interesting or worrying trends is that investors were not always using that information in their decision making. So they'd sort of get it, and then they think, oh, actually, maybe I'm not quite sure if I want to use it. Do I really trust it? And the feedback that we got was that they didn't really always feel like it was reliable. It wasn't always comparable, and they weren't sure whether it was accurate or complete. So that flows through, as you can imagine, into a demand for more robust ESG information. As you can imagine, there's quite a strong connection between investors and boards. Boards are very attuned to what their investors are thinking. So we do also see drives from board members as well, not just for how this information that's going publicly about their performance, whether that's correct, but also how they're using that information internally to make decisions. Boards are signing off on targets like net zero targets and things like that, and they want to know that the information that's coming up to track their performance against those targets is accurate, it's complete, and it's reliable for them to have set the target in the first place, but for them to monitor performance as well. So a lot of that really comes into that confidence in decision making and the need for ESG information to be built into that decision making. You can imagine from a management perspective that's very much the same driver, but actually there's also an interesting other driver from a management perspective. And if anyone works in the non-financial audit or the financial audit world, there is a lot of benefit from the assurance, particularly given the immaturity in many companies of ESG systems and processes, whether that be on data or disclosures. And the benefits and the sort of flow-on effect driver from management is really that improvement that they can get from the assurance process. So the assurance process provides, the comfort that the data or the disclosures are robust, but it also provides comfort, feedback around how can you improve? How can you improve these disclosures in the future? How can you improve the systems and controls that you have to capture that data or those disclosures? And I guess I'll group the last two together, the standard setters and regulators. There's in my mind, I guess, a little bit of an overlap, and there are examples like the ASX corporate governance principles that are pseudo regulators, maybe a little bit standardy, but they have a principle 4.3 that requires validation of all corporate reporting, and they specifically call that non-financial information. They are not saying you need external assurance, but they're saying, as an organisation listed on the ASX, when you put information out into the public domain, including non-financial information, you need to be comfortable that this information is correct. And you need to have your own processes in place to make sure that that is the case. And so that has also driven, I think, a bit of an uptick in assurance, maybe not as much as I expected. Then you have, from a standard setters, industry standards and industry bodies, for example, the ICMM, so the mining industry. They have their own sustainability framework for companies who are part of the ICMM who have to report and get assurance. So that also drives, an assurance from a different angle. And then, of course, avoidance of regulatory audits. So the ENGA legislation, which is legislation in Australia that covers greenhouse gas emissions. And in what we have found is that organisations that do get assurance are less likely to get a regulatory-based audit. And also, if you can imagine, if you're as a company submitting something to the regulator, again, you want to make sure that that information is right. So that, in a similar way, the Modern Slavery Act, we are starting to do more assurance over the disclosures and data in things like the modern slavery legislation. Of course, the standard setters as well have a really important role to play, like the AASB and the AUASB, and we're certainly seeing a lot more, and Joe will talk about that later on. So the little words in the italics are below are sort of the things that we hear and explain that a little bit more. And I think I've touched on most of them, but perhaps not so much the balance and the transparency angle. And I think that that's one of the real maybe missing points from the assurance process that isn't always well understood. In the assurance, you know, we are looking at data. Sometimes we're looking at principles and disclosures. But in the disclosure side of things, we are often working with companies on how to bring more balance and more transparency into those disclosures, really trying to represent the end users of this information and what they might like to hear. I said, you know, this is my kind of view on how I think the drivers are evolving, but they will change, and they are already changing. If we look internationally, Carol, I think, mentioned it before, but the EU Commission, you know, their proposal around corporate sustainability reporting directive, you know, that was released in April, and that has a number of changes in it, among which there is a requirement for assurance. So to be super clear, in Australia, we don't have a requirement for assurance, but there are a lot of different, I guess, indications and drivers. And my view is that in the future, I suspect that this will change. What does it look like at the moment? So you can see the number here that probably jumps out at you. 29% of ASX 200 companies in Australia obtain assurance. If you shrink that down to the ASX 100, it's 40%. So you can imagine, again, if you shrink that down to the ASX 50, it would be even more. So you do see, as I said before, some of the larger, more mature organisations are more likely to be obtaining assurance over their non-financial or sustainability disclosures. You can see on the graph on the left-hand side, the industry-based breakdown of this, with the green boxes being who is obtaining that assurance. And you can actually see quite a high number of real estate there, and actually there's an industry organisation or body there called GRESB that you do get bonus points if you do obtain assurance over certain data. So that is, again, another example of a driver in that regard. So I would say the numbers are pretty low still for the ASX 200, and I do expect and see anecdotally that already increasing. Who provides assurance? This is just our data analysis of this, and this is from last year, but you can see a pretty even split-ish around the big four, and then other organisations as well, certainly providing that assurance role. The standards used, so we use ISAE or ASAE 3000. We use ASAE 3410, which is a greenhouse gas assurance standard, ASAE 3100, which is compliance, and then there are also other assurance standards used as well, like AA 1000 Assurance Standard 2, which is a principles, it comes from a principles-based assurance standard too. So they're the standards we use, and then what's the criteria used for assurance? So in some cases, we are assuring using principles as the criteria. So that might be, as Carol mentioned before, well, the concept of materiality is a tricky one. There's both the concept of thinking about materiality in terms of what is most important to the stakeholders and the most important impacts of the organisation. So we often assure the principle of materiality, but there are other principles included within GRI, IR, or AA 1000, which often form a criteria in our assurance. In terms of the disclosures and the data, again, the criteria there is pretty variable. As Carol mentioned, fully support GRI being one of the most predominantly used standards, and it is, from a criteria perspective, also, again, one of the most predominantly used standards in terms of the GRI disclosure standards. But other ones used as well, as SASB industry standards, subject matter standards, like the ENGA or Greenhouse Gas Protocol or the TCFD. And the last one there as a criteria is an interesting one from me. And it probably does kind of refer back to Carol's comments earlier around the alphabet soup and you know, the lack of consistency that we see at the moment is that many organisations still use their own criteria in reporting key information. So when I sign off assurance statements, a lot of the criteria is criteria that the company has developed. It's a measure that they use and have developed. And I think that in itself is probably a little bit of a concern, but also reflective of the maturity and yeah, the disconnect at the moment with a lot of the different standards. But it also reflects that for some organisations, their particular organisation has certain circumstances where it really makes a lot of sense for them to have their own criteria in terms of how they define a certain characteristic or performance metric. The important thing though, if you're in the assurance world, is obviously that criteria is publicly available. So it's available to the reader when they're looking at this performance, they're able to see how that has been calculated or determined. Okay. Oh, I just had a quick look at the questions. Yes, I'm going to come to the skill sets shortly. Michael, have you found Australian companies are as open? International counterparts, are we lagging? Really good question. And Carol, you might have a comment on this as well. Are we lagging? You know, we often look to the EU, and I still believe that companies in the EU are more advanced than we are. And if you can imagine I've sort of described to you the regulatory landscape. We don't have a strong regulatory landscape around reporting. So in some ways, I do think we're a little bit further behind, but I do think it's really dependent on the industry as well. So I would say that EU would probably in general be further ahead, and you know, I just did some work in the waste sector, and I did see that reflected in terms of some of the waste companies in the EU. But we are, in some ways, I think Australia punches above its weight. But we can certainly answer that question again in the panel afterwards, and I will get to the skill sets. Okay. So kind of how do we do assurance? This is just a very high level diagram of the stages of our assurance that we undertake for all of our clients. So very, I think, similar to a financial audit. We do planning, the assurance engagement. So we develop the assurance strategy. So we do risk assessments. We understand the processes. We develop an audit plan or an audit strategy, and we undertake the assurance, you know, whether that be through analytical, substantive, testing, I'll talk a little bit later about tests of controls. We come up with our summary of differences. We work through with the organisation feedback on their reporting, and then we get to the conclusion stage where we issue the assurance statement. And at the end, we do issue a management report, as I highlighted before, where we're able to highlight kind of the learnings from the assurance and the improvements in systems and processes. So when we do assurance, we absolutely use our sustainable assurance methodology, which is based on our global audit methodology. And I think that the concept will be very similar for other firms as well. So it is, because I said before, we use it and we need to align with the assurance standards in undertaking our assurance. And as Joe will point out a bit later, there's actually now a whole lot more guidance, which is really great, on how to undertake non-financial assurance. But yeah, the process is very structured and robust. Not to say that it's perfect, and I'll get to some of those comments thoughts shortly. But kind of, I thought it would be useful to highlight what are the differences in audit versus financial audit versus the assurance that I undertake. We normally do limited assurance. Very happy if you want to ask the reasons for that. I think in some instances it's a cost thing. Some instances it's also the readiness of the systems and processes. I talk about down the bottom there that substantive testing is more common. The systems and processes are definitely less mature. If we think about the evolution of the financial reporting world, you know, the non-financial reporting world is a fair bit behind still. So the investments in systems and processes and controls hasn't been the same, and there is still a fairly long way to go, I think, to get them up to the level where we'd be able to often undertake reasonable assurance based on contesting of controls. I mentioned a little bit before about criteria. In Australia, at least it's not really regulated other than perhaps for ENGA. Substantive testing, I mentioned, principles-based standards are frequently used as criteria, which I think are great. And then the timing is less concentrated. Our audits or our assurance tend to go over a longer period. not, you maybe have the financial audit team coming in for that 1 month period intensity. We're more likely to be over sort of 2 or 3 months in terms of how we undertake our assurance. And we only do it once a year. There's no half year in most cases for our assurance. Just quickly checking if there are any other questions. Okay, no, I think we're good. And so what are the skills needed for non-financial assurance? So our team, I mentioned before, we have quite a lot of people and we're a real mixed bag. And I think the mixed bag is a really great way to think about what a really great team looks like for non-financial assurance. You absolutely need audit skills. You need that in spades. You need to understand, for us to do a good job and for us to comply with the standards and for us to understand how to ask the right questions, bringing that mindset of professional skepticism, objectivity, all of the, I guess, the audit skills that you would learn through audit and that I have just learnt finishing my CPA Advanced Audit and Assurance course are really critical, critical skills to have when coming at the non-financial audit world. But they need to be combined with a deep technical understanding. And sometimes you have this in one person, which is great, but sometimes you need a team of people, one that brings the audit skills and one that brings the technical understanding. The technical skills are super important when we talk to clients. So we have people in our team with backgrounds in engineering, science, law, environment, those types of things. So my background is agricultural science, environmental science, and economics. That's just an example. People in my team come from all different backgrounds. And the reason for that is obviously when you're talking to the clients and understanding what they're doing and asking the right questions, we need to be able to go really deep into a mine site's water balance. So the water balance model that goes on at that mine site, understanding the inflows, the outflows. I need somebody in that team who in my team who has a really good understanding of water flows and how water is dispersed and flows through the environment, flows through different materials, how much it evaporates, those types of things. So I need that really deep for the client to understand that we know what we're talking about and so we can ask the right questions, so we can query, so we can challenge. Subject matter in non-financial assurance is so broad and it's really hard. And so we find ourselves with our growing team increasingly finding people with quite specific expertise and combine them with what we would call probably generalists who have a pretty good sense of a lot of this subject matter, but also have a really strong sense of audit as well. Happy to take some further questions on this later too. And then my last slide is just in terms of what's next. So, I would say I've been doing this work for about 18 years now, and that's still not very much. I don't, it's probably, there's still a huge amount of improvement in non-financial assurance to come, and I think some of the challenges we get, I've put them here. It's, very happy to discuss them later, but the scope, some of my non-financial assurance engagements can be quite, they can be quite limited in scope. They don't cover the full report, whereas others, I cover the entire report, everything that's in there. And so for me, and I think for the investor and the end user, the value that we're providing in one versus the other is a bit different. The criteria I highlighted before, is it clear? Is it comparable? Is it comparable even, year on year, but comparable between organisations? As Carol pointed out, that alphabet soup makes that still, quite a challenging area. Is the approach to assurance consistent? I can probably put my hand up and say, definitely not. I would say there's a different approach. And I do think, handing on to Jo to talk about some of that guidance, I think that's going to really help with the consistency in the approach. When people read the assurance statements, are they getting a clear understanding of what's been done? Certainly heard this criticism before, we've really tried to strip back some of the complicated language that's often used in assurance statement to make sure that they're really understandable from a layperson. And then is there really a role for us to play around assurance of process and systems rather than just focusing sometimes on the data and the disclosures as well? And I do think that's an opportunity and something that we see come out a lot more in some of the assurance that we're doing, where they might be sort of assurance over a particular asset and what they're doing to manage the significant issues that they have, significant ESG issues. And I do think that's where assurance very much needs to go to, and we are seeing a rise in sort of things like responsible steel, the copper mark, those types of industry or even mineral-based standards, which are very focused on the impacts that are occurring and how well those impacts are being managed, rather than just the data and disclosures. So where are things going? Will we end up with regulation? I'd love to have a crystal ball and know that. I truly think we are, but I just don't know when that's going to happen. The standards I mentioned just before about that there's a whole lot more standards. Carol kind of covered this as well, and how that flows into assurance is certainly relevant. The delivery model, we think about this a lot as EY. Are we looking at, a hub and spoke model with the financial audit team or combined audit teams? Not sure how that's going to evolve, but it's certainly in transition at the moment. I guess my last point is kind of what's next for financial assurance. Non-financial assurance is it's not going anywhere. With the increase in reporting, the increase in demand for that to be credible reporting, there's definitely going to be increase in assurance. I'll jump onto some of the other questions later and hand over to you now, Jo.
Thank you so much, Meg, and thank you to Meg and Carol for taking us through the what, the who and the how of non-financial reporting and assurance, with some really great insights there into the drivers, the developments and the uptake in this evolving field. Meg, I loved the mixed bag, and that certainly reflects my experience too. Look, I'll do my best to keep up the momentum as a third presenter today, and I'll go to my agenda side. Thank you, Chloe. And I'll try to get us to the panel session for some useful discussion on time. So, as has already been mentioned, my focus is the resources out there to help you with non-financial or extended external reporting assurance. So I'll kick off today looking at the EER assurance guidance. I think both Meg and Carol touched on this. The International Auditing and Assurance Standards Board, the IAASB, has recently put out this guidance. So it's a pretty substantial document at 144 pages, so I'll try to make that more accessible and help you to navigate your way to the other side. The content on levels of assurance, and Meg talked about limited and reasonable assurance there, that's worth a look, so we'll take a look at that, and also the assurance report. And there's also some useful support material in the form of examples, so we'll look at those. Then I'll move on to talk about the AUASB, the Auditing and Assurance Standards Board's EER Assurance Bulletin, and a project advisory panel that we've established to look at the reporting framework here in Australia. And I'll finish up with a few ideas on multidisciplinary teams. It was really interesting to hear Meg's thoughts there on the sort of skills that you need and what might be around the corner for EER assurance. So I don't know about you, but I'm exhausted before I've started, but we better get into it. So onto the guidance purpose. So this is the guidance recently released by the International Auditing and Assurance Standards Board. And the purpose of this guidance has always been to enhance credibility and trust in this non-financial reporting, or EER as it's being called. And this is through robust and high quality assurance. And that in itself is through the consistent application of ISA 3000 revised, ASA 3000 in Australia. And that's the standard on assurance engagements other than audits or reviews of historical financial information. And hopefully many of you will already be familiar with this standard. And it's hoped that the quality of EER will also improve as a result of this. And both Carol and Meg have talked about the importance of robust non-financial information and data, but also the comparability from report to report. So let's move on to look at what's in the guidance document to help with this. So the guidance overview, this quote, I think, from the IAASB chair sums up the guidance perfectly, and I'll draw your attention to his words around closely monitoring current global developments to establish a coherent set of sustainability reporting standards, ready to act to enhance our standards, frameworks, and guidance to support progress. And Karen in particular talked about this and recent developments, and so we'll touch on that again later. But as we all know, a consistent reporting framework and assurance standards go hand in hand, so we really need to work closely together on this. As you can see from the pictures over here, I'm pretty proud that we did it with this guidance, that we got it out. I was on the International Project Advisory Panel with the IAASB developing this for 2 years, and there were times when we thought we wouldn't make it, but we did. And as Meg has said, there's some really good stuff in there, which I'm about to take you through. But I also forecast and hope for a tipping point on a global framework to keep us moving in the right direction, because we certainly finally have the momentum. And as you'll hear today, you know, we've worked in this field for many years. I think I've been working in non-financial reporting for 30 years. So it's been around for a while. So it's good timing to get on with this. So let's talk about navigating the guidance now, Chloe. Thank you. So there's a lot on this slide. There's a lot in the guidance. So it's 144 pages, but this provides a snapshot of how it's organised. And the challenges here of assurance, of EER assurance as we call it, are presented in 3 areas. Those relating to behaviour, some relating to the process of assurance, and then some at the bottom there on sort of specific considerations. There is some specific coverage on limited versus reasonable assurance, which is a tricky and a grey area, and that can be found in Appendix 3, and I'll touch on that specifically shortly. So just looking at this slide, the behavioural section covers things like competence and capability. So these are the new skills that Meg talked about that are needed for EER assurance. And the idea of multidisciplinary teams made up of members from a variety of backgrounds, including financial audit, strategy and business, and potentially more technical sustainability fields, such as the person Meg talked about who could really delve into water usage or water discharge information for a mine site, for example. So more on that later. And professional skepticism and professional judgment fall into this area. And there's been much research on these topics. How best to encourage professional skepticism is almost the million-dollar question, in particular where ER systems are immature and accuracy and completeness and even balance can be questionable. The process section in the middle there covers the majority of challenges. Let's draw out a few. So determining preconditions and agreeing the scope is a big question for ER or non-financial assurance practitioners, because there's a need to then step back and say, well, how mature are the reporting systems? And is the evidence even there to actually facilitate the insurance engagement to go ahead? So assurance readiness exercises are still often quite useful to see where things are at. Internal control, without strong internal controls, auditing the information and data presented can be challenging, and a lack of maturity here can also act as a barrier to progress. Evidence is in this part of the guidance, so the types of evidence are varied, and Meg talked about some, and you know, it ranges from training records to water monitoring spreadsheets, from SAP data on fuel usage to board papers on strategic discussions. So quite a range of evidence that might be needed. And the bottom part of this slide, the specific considerations, is a couple of areas that are quite prominent and quite challenging in ER, which are things like qualitative information and future-oriented information, which is very key to integrated reporting in particular. And how can we audit something that hasn't happened yet? And it almost seems as though crystal ball gazing is now an audit skill for this type of assurance. So let's move on, Chloe, to reasonable versus limited assurance. So I wanted to touch on this because I don't think I've been in a session on this type of report assurance without this coming up. It really is that old chestnut that I've put in the title here. Confusion remains out there as to what the difference is, and the guidance has had a go at tackling it, and so it should. Chapter 8 and Appendix 3 are the places to look for this. I mean, the guidance includes a scale of assurance here, so not just binary, black and white, either or. The concept of meaningful assurance is introduced based on how much the assurance enhances user confidence and the credibility of the report for the reader. So the level of assurance may also be different depending on the topic. For example, you might find reasonable assurance over some parts of the report and limited over other, which is something that Meg touched on. And in my experience, for example, climate change information and data is becoming more mature, with reporting framework requirements from the Task Force on Climate-Related Financial Disclosures, the TCFD, providing some strong framework requirements that have perhaps meant that the data is becoming more mature than some other areas and warranting reasonable assurance, sometimes requiring reasonable assurance. But you see often limited assurance more often in many data sets, and you'll see this table in Appendix 3, which has a go at the task of illustrating limited assurance as a range of different procedures using pale, mid and dark blue arrows, and reasonable assurance is over on the right hand side in a dark blue column. And the focus of the procedure is shown, and really the focus relates to identifying and understanding underlying subject matter where material misstatement may be likely to occur. So now that's clear as mud as it usually is in this space. I'll move on to talk about the assurance report, which is another interesting difference perhaps between financial assurance and non-financial assurance. So there is recognition that context in a non-financial assurance report can be important to help users understand the assurance provider's opinion. And by that, I guess I'm referring to the different wide-ranging stakeholder groups that can be users of this type of information. So not just shareholders and investors, but also customers, partners, suppliers, employees, interest groups, regulators, peers, government, you name it. You know, Carol and Meg have highlighted this. And assurance conclusions and opinions over the different types of subject matter found in EER can often benefit from contextual information and subject matter specific recommendations in what we call a long form assurance report. So as we roll out this guidance on EER assurance, the AUASB in Australia is interested to hear from practitioners, from those on this webinar, about any specific needs that you identify in relation to things like the long form report and the use of recommendations in an EER assurance report to enhance user understanding. On to the next slide, please, Chloe. So moving on to the support material, I promise everyone I'm going to keep to time. There are 17 examples in there. And let me tell you, the International Product Advisory Panel wanted many more, but the guidance was already getting extremely long. But once we nail the digital accessibility with hyperlinks, this should stop being an issue. So we're keen to track implementation of the guidance, as I've already mentioned, and any further examples that would be meaningful in Australia for the types of EER assurance we undertake here, please let the AUASB know, because there is capacity for us to look into that. This slide shows the broad focus of the first 10 examples, so I'll just draw out 2 or 3 to let you know what's in there. So competence, which I've touched on and Meg talked about, is covered in example 1. Rational purpose in example 2. Suitability of criteria is a key challenge that comes up time and time again. And both Carol and Meg talked about criteria, and that's covered in example 4. Obtaining evidence, this time for public sector reporting, is in example 7, and management commentary is in example 9. Example 10, I'll just mention, this links back to the IR, the Integrated Reporting Framework, as criteria. And it's an important example for the growing number of integrated reports out there. And we in Australia do have some experience in this evolving field, in particular CPA Australia, who have been undertaking integrated reporting for some time and have had that report assured. So, please look at their report, please look at the assurance report within it as a good example. So on to the next slide. More examples. This is examples 11 to 17. I'll just draw out a couple. So public sector performance statement in example 11. SASB, I think Carol touched on SASB, the Sustainability Accounting Standards Board. SASB standards as criteria is covered in example 15. TCFD, the climate change side of things, covered in example 16. And I guess we're hoping there's something in there for everyone. But again, as I say, we're keen to identify any additional support that can be provided. On to the next slide, Chloe. So the credibility and trust model. Look, I guess at this point, my presentation is relatively detailed. It's about the resources out there. And I just wanted to pull us back to perhaps something that even Carol was talking about, which is this credibility and trust model, which acknowledges that assurance, whilst it's incredibly important, is really only part of what provides credibility for users of non-financial reporting. It's not the only factor. So the need for a really good, sound EER framework has come up in both Carol and Meg's presentations and what exists at the moment. And I'll talk a little bit about the project advisory panel we've established in Australia recently to look into this. But strong governance also features as ensuring, I guess, that there are robust internal processes of reporting and well-established and executed controls. Consistency with wider information is also really important in this space, and we often see quite a range of other sources available to the user. And similarly, access to other external reports and professional services engagements related to EER can be prominent. So onto the bulletin. Then another resource out there is something that the AUASB has recently put out. Really, this introduces the guidance in the Australian context before helping with navigation against ASA 3000. So onto the next slide. And the focus of the bulletin is really to support your navigation. So it's a bit like this presentation. It's a good thing for you to refer back to when you're looking at the IAASB guidance. And it also calls for your feedback, which is something that I've already mentioned. So back onto the next slide. And as I mentioned earlier, we've recently established a project advisory panel. And today is all about EER assurance and the resources available. But also the reporting framework and the approach to assurance must go hand in hand. So to this end, the Financial Reporting Council, the Australian Accounting Standards Board and the AUASB have established a project advisory panel to work out the next steps on the EER framework in Australia. The objectives are to achieve comparability in EER, which has come up a few times, and to meet stakeholder expectations and legal reporting standards. Also providing meaningful disclosures on EER and establishing strong links with the financial reporting framework we already have. Members come from far and wide, covering reporters, investors, academics, accounting bodies, reporting bodies, legal professionals, assurance practitioners and standard setters. I fall into the last two categories and find myself on another EER project advisory panel, and Meg is also on that panel. A position statement is being developed and it'll be with you soon. And I don't envy Bill Edge his role as chair of such a diverse group, but if anyone can round us up, it's Bill. So on to the next slide, which is on teams, multidisciplinary teams. Just before we finish, I wanted to touch on the much bandied about term, multidisciplinary teams, and what it really means for assurance practitioners out there. And it's about complementing your financial audit skills with EER specialists. Specialists with some specific reporting experience using, say, the GRI standards, the IR framework, the SASB standards is really useful. Audit experience is also critical, which may relate to specific subject matter and data sets such as climate change. These specialists can be guided by you, the financial statement auditors, on the assurance audit process and how the standards are applied. It's worth noting that their understanding of ISA 3000, for example, may be limited. Where can you find these specialists? Well, I've provided a few ideas here that perhaps you can come back to. So on to the final slide. What next? Okay, so in summary, we've got some good resources out there to help with EER assurance. So hopefully I've taken you through some of those today, and you can go and have a look at them after this webinar. We've got ISA 3000 and extensive guidance from the IAASB and the AUASB bulletin to help with the navigation of it. We also have the project advisory panel working on a more robust EER framework, but where to from here? So please use the guidance and let us know if there are any further needs that could be enhanced. Keep an eye on the fast pace of change internationally, and we've all mentioned this today. This includes the International Financial Reporting Standards Foundation, the IFRS Foundation, establishing a Sustainability Standards Board to develop an international EER framework, focusing initially on climate change. But the question is, How long will that take? Carol mentioned that SASB and the IIRC have merged to form the Value Reporting Foundation. And while all this is happening, we must keep up the momentum and encourage EER. Education of investors and other stakeholders on the value of assurance remains important, alongside providing financial auditors with training in EER and non-financial reporting. We must continue to promote integrated assurance teams where EER subject matter experts work alongside financial statement auditors, and continue to undertake assurance readiness where it's needed to check that reporting systems are mature enough for assurance and that the necessary evidence is there for it to actually happen. All the time, we must remember that EER is still evolving. We want to encourage it. And I always say, not hit reporters over the head with an EER assurance audit when they've just collated the relevant non-financial data for the first time. We need to continue working on some of the challenges, the more challenging preconditions for EER assurance, such as suitable criteria, subject matter information, and rational purpose. So there's not much for us all to do then, and thank you for listening. I'm very happy to answer questions, looking forward to the panel discussion, and I'll hand over to Claire to coordinate that. Thank you.
Thank you so much, Jo, and thank you also, Carol and Meg. That was absolutely full of insights and information. So we'll now have a panel discussion, and so Carol and Meg, yeah, if you join us back with your cameras on, that would be great. And I want to put this question in from Stefan to you, Carol, which is Stefan observes that the purpose of non-financial assurance is around the accuracy of reporting, not whether the reported information is actually any good. And he asks how external assurance can contribute not only to the better reporting, but to better performance. Would you like to answer that one?
Yeah, so I think one of the issues has been that the scope of a lot of assurance exercises has been largely limited to numbers, as I said. And I think what we need to see is the assurance of processes. There's no good assuring numbers if they're not the right numbers. And so we need to be sure that the organization is reporting the key issues relevant to its organization, if it's sustainability, on sustainability, and its key impacts on society and the environment. And I think that if assurance providers are looking at the processes by which organizations are identifying these issues, they can give guidance to the organization about how to do that better. And they'll be looking at things that are missed from reports, for example, that ought to be reported.
So leading on from that, Carol, if I can ask you a related question then, so what sort of problems are you seeing? You talked a lot about the reporting, but in relation to the assurance on that, what sort of problems are you seeing around the assurance obtained on non-financial information?
Yeah, so one of the findings of research, and this isn't having a go at any particular assurance provider, it's just a trend. So the findings of research are that there is that limited coverage of the narrative part of the reporting. So the management approach to reporting and the governance oversight. The governance oversight is critical, and looking at how sustainable development risks and opportunities, as an example, are incorporated into strategy. So that limitation of the scope to numbers has been a key issue. Hopefully it will start to change now there's more guidance. Another key issues, and this is particularly with respect actually to the accounting body, the accounting consulting assurance providers, and particularly larger ones, is the lack of detail in assurance reports. And hopefully we're starting to see that change now. in order to enhance the credibility of a non-financial report or a sustainability report, we really need to see some detail in the assurance report about, where improvements can be made. If we're not seeing that, then it doesn't really give much. There's a limit to the credibility that it's adding, I think, to readers of the reports.
Yeah, so you're pointing to the need for those longer form assurance reports that I think Jo was referring to.
Yes, definitely.
In her presentation.
Really important. Yes.
Yeah, fantastic. So,
Can I add something to that, Claire?
Of course, Meg.
Yeah, sure. And I actually was typing a response to Stefan in the chat as well. It's a really great question, Stefan. And there's definitely a role to play in making sure that the information is accurate and complete that goes out there. But yeah, the point around, is it actually is it the right information? And I think for sure, Carol, we challenged that through the assurance, but is the company focused in the right areas? Are they improving quick enough? Like actually driving the change that we need to solve some of the world's most wicked problems is definitely something that we would love to do through assurance. And I think with the rise, as I said before, around some of those, as Carol said, the process-based assurance is absolutely comes through in and driven by some industry organisations like ICMM, gold mining, responsible gold mining principles, Coppermark, those types of things, where you're actually, as an assurance provider, you're in at the site and you're understanding how well their processes are managing their impact on water or emissions or something like that. And providing that assurance is much more in this vein of being impactful. But I don't think we've completely nailed, I haven't, and TCFD is another good example, I think, where we use TCFD as criteria. We are looking at whether or not and pushing the organisations to appropriately disclose, but in the end, we are still kind of assuring, disclosures and even processes, and it is, an element of a driver for change. But actually, I think the driver for change still needs to not just be relying on assurance for that overall, driver for change. But I do agree there's a much stronger role assurance could play, both assuring processes, looking more deeply at assets, looking more principles-based assurance. And Carol, I completely agree with you. There are some assurance where I feel like there is, the scope is so, is much broader, much more impactful. We look at principles, as well as data, as well as disclosures. And, it would be really great if all could go down that path at least.
Just to add briefly, having now read Stefan's question, this is about targets, and assurance providers could give assurance over whether the targets set are actually appropriate in the context.
Yeah, and absolutely, we are starting to do that. A lot of, climate change reports and things like that, whether or not they are, and I think this is where it gets into an interesting world, Carol, of what is the criteria, and in terms of providing that assurance. But yeah, if we're looking to drive that change, it's certainly, I think, a really good question. Sorry, Jo, you look like you had something to add.
I was going to jump in. Yeah, I'm itching to jump in here. So no, I think it's fantastic what Carol and Meg have both been responding on this, and I guess there are three things I would quickly raise. One is materiality as a focus, two is completeness, and three is balance. And the materiality piece, and Carol talked about this, which is around, is the reporting entity actually reporting on what is most important to the organisation and its stakeholders? And there's a role for assurance in that, in ensuring that, an appropriate process has been followed to determine materiality, and then it's actually been used in terms of what's reported. The balance piece is really interesting, and that's around how open, honest, and transparent reports are, and that's for the assurance provider to consider the statements and the information that's being assured in that context, and to say, is it balanced, or is it all very positive, and perhaps the underperformance isn't reported, and that's related to completeness as well, in the sense of, are there things missing? And so materiality, balance, and completeness, I think, are really key parts of assurance.
Yeah, I'd say so, Jo, and I think that's probably one of the unknown parts of assurance that people, who aren't doing it wouldn't realise, that we spend a lot of time debating with companies and saying, this is not balanced. You can't just say this. This is far too positive. If you think about what we've seen in the organisation, there's this other thing that's also occurring. You can't not talk about this. But it's interesting that I sort of really take the point of Carol, is that you don't see that from the assurance statement. You don't see that we've been in there kind of battling away and trying to get, more balanced disclosures. So yeah, there's something for me to think about there, and to how that's reflected in the assurance statement. And maybe that is something that comes out in like a key audit matter in a long form statement or something.
It would be really great if we could use almost a review of implementation of the international guidance to really delve into that, Meg, because the context in a longer form assurance report in these kind of non-financial reports could be really helpful to users around what the company's doing well or what the organisation is doing well, but also what needs to improve. Back to Carol's point, is how well are they tracking on the areas that were assured.
One of the standards where we do these long form assurance statements is when we use the AA1000 type approach, or even IR as the criteria, where we will, and the challenge is also the organisation needs to be comfortable with those, that public disclosure from an assurance perspective. But yeah, if people are looking for an example, I would suggest one that I only know the ones that I work on mostly, but Stockland is one of my clients, and we do a longer form assurance statement where we make further disclosure around, things like their strategy, how ambitious it is, and some of the things we think they need to look at in terms of how they implement that strategy. So those kind of comments, I think, are starting to come through. It's not perfect though.
Yes, I'm sorry to jump in again, Carol. Last thing I'll say, I promise. Isn't that fascinating, Meg, that conversation? As an assurance practitioner myself, I have that conversation with the reporting entity where I say, here's my statement. I won't be changing what's stated in here and the integrity of it, but, for them to review. And it's really interesting, the conversation that ensues, when it's a longer form report.
Oh, that's interesting. And I want to read out another question that's come through from Robert. He says, as I see it, these sustainability risks and opportunities are not as easily validated as financial data. It'll take time and it will be expensive and something that companies will not want to pay for. Without regulation, how will this be achieved? Maybe Carol, would you like to comment on that one to start with?
Yeah, well, I would say, first of all, I think companies need to think a little bit differently about this, because these risks and opportunities can really have an impact on the business and the success of the business if they're identified and incorporated into strategy. So paying for some help to do that is I think we need to think of that as more worthwhile. But I also think that we're not asking assurance providers to identify every risk and every opportunity. The role of an assurance provider then would be to look at the management processes for identifying those risks and opportunities and incorporating them into strategy, and the governance oversight of that, and provide some assurance around that. That is what I would see. And this is where all this talk about harmonization and really, in effect, dumbing down reporting to a few indicators. The World Economic Forum indicator have suggested just over 20 indicators, 18 of which come from the Global Reporting Initiative, is to me really the wrong approach, because if we're just looking at a few indicators, we're missing these matters which really will and can have a massive impact on the organisation as well as society and the environment. So I think we need to start thinking about these things differently.
Thanks, Carol. And I'm going to keep moving on to some other questions, but by all means, Jo and Meg, when you want to chip in, just say so. So Meg, I was wondering, you are a you're a non-accountant, and so from your point of view, do you think financial report auditors are up to the challenge of assuring all of this non-financial information? Will auditors need to continue, those financial report auditors need to continue to rely on experts, or are we going to see accounting and subject matter expertise merging to create new specialisms?
Yeah, to be very clear, Claire, I did accounting for non-accountants at university, so definitely on the lower end of any kind of accounting expertise. And I think what I've had to improve on, and as I said before, I just finished the Advanced Audit and Assurance CPA subject, so I've had to strengthen along the way my knowledge and understanding, and the teams that I work with. So I sit probably more on the technical side, and then have had to learn. And I have been at EY for a long time, so I've done a lot of the training and things, but I've had to learn the accounting side. And I think it can go both ways. I do think I've got one of the other partners in my team was an accountant, and then she's learned the technical side. So it can be either or, in my view. In terms of where it's going to play out in the future, we're really thinking about this quite a lot at the moment. We already have teams that provide technical expertise to the audit. So they might be around closure or remediation or something like that. So they sit in our team, so they already do that. And it's just a case, is this going to be that the audit becomes bigger and, we provide this little, these technical expertise and technical memorandums into the audit? Or what we're tending to do at the moment is we're bringing people across from audit who often have, an engineering or a sciencey background, or who have a huge passion in this area, and we're getting them up to speed on the technical side. And it is, a lot of learning and to be undertaken, but it's absolutely achievable from either or perspective. And there are really great skills. And I think about the team who I have, who I, do some of my bigger jobs like BHP Sustainability Assurance with. They've come from audit. They've come from very strong accounting backgrounds.
Thanks, Meg. Joe, I wanted to ask you, do you think there's any risks for audit firms into the future if they actually limit their service offering to financial report auditing? Do you think there's a need to expand the service offering?
Look, thanks, Claire. That's a really interesting question. And, I think yes and no. So a little bit like Meg's response, I think the demand for financial report audit will remain. So it will just evolve and extend to include non-financial information. So I think there'll be a demand for, for more integrated teams. So, what Meg was talking about, where you've perhaps got the more technical skills around whether it's climate change or mine closure planning or, water table information. But also equally, strategy and business model, those kind of skill sets, as well as the really fundamental audit process expertise and the financial and the accounting skill set. So I think in terms of the risk, I think the demand will remain for financial audit, but perhaps there'll be more opportunity rather than risk for extension of what firms offer. But I guess there may be a risk of loss of clients. If clients are wanting to focus on a one-stop shop for their audit, covering all the necessary expertise that we've just talked about, then I guess there is a potential risk of loss of clients if an audit firm chooses to stay focused on the financial side. But there's still going to be demand on the financial side, definitely.
Yeah, thanks, Joe. And perhaps back to you, Carol, just to reflect on those last couple of comments from Meg and Joe. So do you think accountants really, are in a position to add value on the reporting and assuring of non-financial information? Because it's a bit of a moving feast at the moment as to who's playing which role in this.
Yeah, I think it depends on attitude a lot of individuals. Accountants have excellent skills at examining internal controls and processes, for example, and identifying quality evidence. And that is incredibly important in the process. But we also need accountants, if they're going to be doing this, to be able to and be confident at assuring non-financial information and processes. And it has been the accounting firms that have been lagging behind in some of this work, where the sustainability consultancy type firms have have sort of been a bit more innovative about around it, and things are perhaps evening up now in that regard, as skills develop, and with mixed assurance teams. So yes, I do think accountants have things to offer around, internal controls, quality evidence, but it really does depend on aptitude. There has to be an aptitude to being able to identify and understand these sustainable development risks, opportunities, and impacts, and the need, from my perspective, to understand the position of different stakeholders of the organisation, because they in turn do have an impact on the value of the organisation. So yeah, that's my piece on that, I think.
Yeah, thanks, Carol. And Meg, obviously the large firms such as yours, have built up expertise. As we discussed, you're from a non-financial background, non-accounting background. But what tips would you have for the small or medium practices as to how they can get started in gaining this competence and knowledge in the non-financial reporting and assurance space? And will they need to bring in that expertise, or is it really realistic for them to upskill?
Yeah, I really hate those answers where it depends, but it kind of does depend. And it depends on the request from the client. It depends how complex the assurance subject matter is. And I do think you would probably, and we even do this still, need to have the flex to bring in people where really deep expertise is required. I've spoken a lot about mining, so I'm not going to talk about that mining and energy now, where you often do need sort of much more deeper technical expertise. But I also do the assurance for CSL, for example, and the expertise there that I need, in some cases not as technical, but I do need really good understanding of health and safety, for instance, because of the measures and the data and disclosures that we're asked to assure, then leads you into the technical competence that you might need. So I do think some of those things that they can be learned. And in terms of upskilling, Claire, to your point, there are a range of great courses at different universities, kind of master's programs that help with these types of things. But there's a lot of short courses and a lot of, there's a huge amount of available reading, to get up to speed with sustainability in general, but also specific subject matter. And if biodiversity is an example of something that's, I would say even like I have to continue like it is a CPE, it's continual professional education. I have to continue to educate myself, and from a biodiversity perspective, the Task Force on Nature-related Financial Disclosure, which is very similar to the TCFD, is something that's again new. I'm having to learn about it right now, but it's anybody can learn about that. So it's keeping up to date with developments across that spectrum of E, S, and G, and that is the hardest thing, is because it is so broad. You're anything from human rights, child labour, to water, to waste, to health and safety. It is very, very broad. And I think getting a general understanding enables you to be what I would consider that kind of sustainability or non-financial generalist. Conscious of time, so I'll stop there.
Yeah, thanks so much, Meg. And look, just in the last sort of minute or so remaining, Carol, can I go to the next question, or did you want to comment there?
No, go ahead.
Okay, great. Sorry. Yeah, so look, we've our chairman, Merrin, has just made a comment and question here. Isn't the question of the value of non-financial assurance also where integrated reporting is so important? It goes to the heart of organisation business models and clear strategy, risk management and delivery of objectives. So sorry, Carol, I see you have made a comment there in the chat box while Meg was responding to the last question. Do you want to just say quickly your comment on that one?
Well, to me, that's, it's part of looking at the internal processes and the decision making, and thinking about risks and opportunities and the context of the organization too, and including that in strategy, the business model, thinking about targets. That to me is part of where an assurance engagement can add value.
Claire, can I just jump in very quickly?
Go ahead, Jo.
And thank you, Marion. That's such a good point to raise. And just to say that, you know, integrated reporting has a really important part to play, because at the end of the day, we want to integrate this information into the way organisations do business. So tackling all of these issues, whether they're financial or non-financial, if they're material to the organisation and its stakeholders, is really critical. And integrated thinking and integrated reporting can achieve that. So it's not making it separate, it's bringing it together and bringing it into the strategy and business model, as Carol said, of the organisation. So there's real value there. Marion's absolutely right.
Thank you all. I think we better draw this to a close now, because I see that it's just after 2 o'clock here in Melbourne. I'll just note one final comment from the audience. Samantha's noting that long term, she says, I think that this may be a great opportunity to connect other areas of study at university, research, environmental science and so forth, and showing how whoops, this is just jumping around on me. Whoops. How transferable skill sets can be between these disciplines, which I think is a really, really good observation. So I just want to wrap it up there by saying thank you so much, Professor Carol Adams, Meg Fricke and Jo Kane, for your fantastic insights on how non-financial reporting is rapidly evolving. It's clearly a very complex area, and certainly assurance is increasingly being demanded. And so we really appreciate hearing from you on what accountants need to do to position themselves and their firms to provide that assurance, and where they can look for resources to get started. So thank you all very much indeed. I'll hand back over to Chloe.
Thank you.
Thank you, Claire. Thank you, Carol, Meg and Jo. And thank you everyone for your participation today. In the next 3 working days, you will receive an evaluation survey accompanied by the recording of this webinar and the slides. We really appreciate your feedback, as it's extremely valuable to CPA Australia to help us deliver better events for you. Thanks again, and we look forward to welcoming you to another CPA Australia webinar soon.